Hey everyone, welcome back to Corporate Decoder, the place where we dissect the inner workings of big companies, and let me tell you, Bowman Consulting Group's latest filing is packed with numbers that tell a story about growth, acquisitions, and some pretty interesting financial maneuvers. So buckle up as we decode their second quarter report for 2025. Let's dive straight into the heart of it, their balance sheet. For the period ending June 30, 2025, Bowman reported total assets of a hefty $538 million. That's up from nearly $506 million at the end of 2024, showing a clear expansion. What really jumps out is their goodwill, sitting at over $13.5 million. This number often represents the premium a company pays over the fair value of acquired assets. So it signals they've been busy buying other companies, which they indeed have. Their accounts receivable, meaning money owed to them by customers, also saw a healthy increase, climbing from around $105 million to over $113 million. This generally means they're selling more services. Now, looking at liabilities, their revolving credit facility balance jumped to about $60 million from $37 million. This is essentially a flexible loan they can draw from, and that increase suggests they're using it to fuel their operations and growth. Moving over to their income statement, Bowman brought in over $122 million in gross contract revenue for the second quarter of 2025. That's a solid 16.8% bump from the same period last year. This growth was pretty consistent across their business segments, with transportation services seeing a notable 28% jump. And the bottom line for the quarter? They posted a net income of just over $6 million, a significant turnaround from the nearly $2.1 million loss they reported in the second quarter of 2024. That's a massive swing from losing money to making a good profit. This translates to earnings per share of 35 cents for the quarter, up from a loss of 13 cents last year. Big improvement there. When we dig into the details, a big driver of this growth is their acquisition strategy. Remember that Surdex Corporation acquisition we saw mentioned, that happened back in April 2024, and it was a significant deal costing them over $43 million. They also completed 2 more acquisitions in the first half of 2025. These aren't small minor deals, they're strategic moves to expand their services and reach. All these acquisitions are reflected in that growing goodwill number we saw on the balance sheet, pointing to a company actively consolidating its market. It's worth noting that these acquisitions also come with intangible assets like customer relationships, which they amortize over time. That amortization expense for the 6 months of 2025 was about $5.1 million. It's a cost of doing business when you buy companies, spreading that acquisition value over the expected life of those acquired assets. Let's circle back to their credit facility. On March 12, 2025, they actually increased their borrowing limit on their revolving credit facility from $100 million to $140 million. This gives them more financial flexibility. As of June 30, 2025, they had borrowed about $60 million against it, showing they are actively using this line of credit to support their operations. Their notes payable, which are other forms of debt, totaled around $31 million at the end of June 2025. This includes convertible notes payable, which can be converted into company stock, a common way for growing companies to finance themselves. They've got notes with interest rates ranging from around 3.25% to over 11%, showing a mix of debt structures. Something interesting to note are their related party transactions. They have several notes receivable and payable involving entities like Bowman Lansdowne Development LLC and Mr. Bowman himself. These transactions, while common in businesses with close ties, are always worth watching for any potential conflicts of interest or unusual arrangements. For example, they have millions in notes receivable from affiliated entities, with Mr. Bowman providing personal guarantees for some. Bowman is also quite active with its employees through various stock incentive plans. They've granted restricted stock awards and performance-based stock units, showing a commitment to tie in employee compensation to company performance and long-term value. The total unrecognized compensation cost for unvested awards is significant, indicating future stock-based expenses. Now let's talk about what really drives profitability for a company like this, their net service billing and adjusted EBITDA. For the second quarter of 2025, their net service billing, which is essentially revenue from their employees' direct work, rose to about $100 million. Crucially, their adjusted EBITDA margin, a measure of operational profitability, hit a strong 18.7%. That's a significant jump from last year's 14.3%. This suggests they're becoming more efficient at turning their revenue into actual operating profit. Their adjusted EBITDA itself, which shows their earnings before interest, taxes, and other non-cash charges, was over $20 million for the quarter, up a remarkable 50% from the previous year. This indicates strong underlying business performance beyond just revenue growth. Looking at future business, their backlog of work increased substantially, now standing at over $438 million. That backlog is spread across their core markets, showing continued demand for their services well into the future. Now, for the crucial question of liquidity, Bowman has a substantial cash balance growing to over $15 million by mid-25. Combined with their credit facilities and operating cash flow, they seem well positioned to cover their expenses and fund future growth. Including those acquisitions we talked about, they're actively pursuing more acquisitions, which is a key part of their growth strategy. For the first half of 2025, operating activities provided over $16 million in cash, a big leap from just over $5 million in the same period last year. This shows their core business is generating more cash. Investing activities, however, used less cash this year, about $1.8 million, down significantly from over $20 million last year, partly because they made fewer acquisitions in the first quarter of 2025 compared to 2024. Financing activities saw a shift from providing cash to using it, with nearly $6 million used in the first half of 2025, compared to over $17 million provided in 2024. This is largely due to less borrowing on their credit facility and increased share repurchases and debt repayments. On the risk front, it seems Bowman believes their previous disclosures still cover the major concerns. This generally means no new unexpected threats have emerged, but it also doesn't mean the existing risks have disappeared. They're still operating in a dynamic environment. On the controls front, management has reviewed their internal systems and concluded they are working effectively, which is always a good sign for financial reporting accuracy. It's interesting to see that several key executives, including the CEO and CFO, have established trading plans, often called 10b5-1 plans. These are pre-arranged plans for selling company stock designed to avoid insider trading concerns. This suggests they are anticipating future stock sales, perhaps as part of their compensation or diversification strategies. So what's the takeaway from all these numbers and disclosures? Bowman Consulting Group is clearly in a growth phase driven heavily by strategic acquisitions. Their revenue is up, and more importantly, their profitability, as measured by adjusted EBITDA margin, is improving considerably. They're using their credit facilities effectively to fund this expansion. While the increased goodwill and related party transactions warrant a watchful eye, the overall financial picture for the second quarter of 2025 is strong, showing a company successfully navigating growth and improving its operational efficiency. The substantial backlog also points to a positive 2025 is strong, showing a company successfully navigating growth and improving its operational efficiency. The substantial backlog also points to a positive 2025 is strong, showing a company successfully navigating growth and improving its operational efficiency. The substantial backlog also points to a positive outlook for future revenue. Alright, that's our deep dive into Bowman Consulting Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord community linked in the description for more in-depth discussions. Thanks for watching. See you next time.